Why are gold and silver prices exploding in 2025-2026? The truth nobody will tell you. My dear friends, while you were sleeping, something extraordinary happened in the global economy. On January of 2026, gold touched an all-time high of $4,956 per ounce. Yes, you have heard it right, nearly $5,000 per ounce, which is instrumental and mind-boggling. And when we talk about silver, it has actually shattered all the records. By around $98 per ounce, it is absolutely mind-blowing that it has climbed up to 222% compared to last year.
Now let's talk about gold and silver. For weeks, both these precious metals have seen a historic rally, but in the past few days, there's been a dramatic turnaround. Prices are falling faster than they have in years, and investors have only one question. Should they start buying gold and silver? This was gold today, dropped by more than 9%. Gold was trading at around $4,400 for an ounce. 1 ounce of gold is around 31 grams. It was selling for $4,400 in Asian markets, and silver fell even harder.
Precious metals continue to shock markets, with gold and silver repeatedly hitting all-time highs. Investors are rushing to these safe haven assets amid global economic and geopolitical risks. But some analysts warn that the rapid rise could signal market instability. Gold prices have surged past $5,500 per ounce, extending a strong rally that began in 2025. Silver has also kept pace, approaching $120 an ounce as both industrial and investment demand surge. But the gains aren't limited to just those two.
Such growth, my friends, is unprecedented, has never been seen in the history. And the question everyone is asking is, why? Why now and why so explosively? But here's what makes me angry. The mainstream media, they'll give you very surface level answers. They'll say, oh, it's just inflation. Or they'll say it is just demand and supply. But my friends, reality is far more complex. It is far more dangerous and far more fascinating than what they are telling you. And today, we are going to break down the real reasons behind this historic surge. And I promise you that by end of this analysis, you will be able to understand the global economic chessboard better than 99% of the people out there. So let us begin. Hello students, this is Perspective and my name is Preetpal Singh. Now first, let me give you certain facts very correct. Pure, hard, undeniable facts that are happening right now in January of 2026. As of 23rd January of 2026, gold is trading at $4,956 to be specific per ounce. Just read the number again. In just 1 year, from January of 2025, gold has surged nearly 79%. That's almost 80% in 12 months. None of the asset has given this much returns. And even more explosive, trading at $98.66 per ounce as I speak, up 222% year over year is silver. From around just $31 per ounce in January of 2025 to nearly $100 now. When was the last time, please tell me, you have seen such a dramatic move in these precious metals? And here's what Goldman Sachs, one of the world's most powerful investment banks, they just raised their year-end 2026 forecast to around 5,400 per ounce for gold. That's another 10% upside from the current levels. But here's what's truly devastating. In Indian rupees, gold has absolutely surpassed 1,45,000 rupees per 10 grams in many cities. Actually, do you understand what this means for a common man? For the family who's planning a wedding? For the person who's trying to secure their future? The metal that was our traditional store of value has become unaffordable for millions. But these numbers, my friends, are just symptoms. Let me tell you and let me take you to the disease. The disease is the debt bomb, which nobody's talking about. And here is the first uncomfortable truth. The world is drowning into debt. As of 7th of January 2026, just 2 weeks ago, US national debt stands at around $38.43 trillion. Let me repeat that again, $38.43 trillion. That is actually a number which we can't even spell. And listen to this very carefully. In just 1 year, the debt has increased by $2.25 trillion. That is around $8.03 billion a day and around $334 million per hour, and which is around $5.57 million per minute, or around $92,912 per second. Every single second that passes, America adds around $93,000 to its debt. While you and I, we are having this conversation, hundreds of thousands of dollars are being added. Now, the interest payment alone, in the last quarter of 2025, the US Treasury paid around $276 billion just in interest. That's around $92 billion per month. And for the fiscal year 2025, the interest cost has hit around $952 billion. And they have projected to cross around $1 trillion annually very, very soon. And that will be more than the defense budget of United States of America. It will be more than Medicare, and it will be more than many countries' entire GDP. And what about Europe? The Europe is also not far behind. The Eurozone's combined debt to GDP ratio is over 90%. Now what about Japan? Japan's debt to GDP ratio is over 260%. Now what about China? Their hidden local government debt might have exceeded $10 trillion. Now you might be questioning that why I'm all of a sudden talking about the debt. We were talking about gold, we were talking about silver, and their prices increased. But why suddenly, all of a sudden, we shifted on debt? See, now when we see that most of these governments, they are very deeply in debt, the question is, what do? They start printing more money. They keep interest rates lower than they should. They devalue their own currencies to make debt servicing easier. And when currencies lose value, what actually happens? People run for real assets. Assets that cannot be printed. Assets that have held value for 5,000 years of human civilization. And yes, now you are very correct to relate it to gold and silver. So people and countries will start running, investors will start running towards assets, that is gold and silver. Also, since we have understood this, let us understand the geopolitical earthquake. My friends, there's something even bigger happening here. Something that the establishment doesn't want you to focus on too much. That is the de-dollarisation of the global economy. For the past 80 years, US dollar has been world's reserve currency. Every country needed dollars to buy oil, to trade internationally, to hold its reserves. And this is what gave America an extraordinary privilege. They could print money and the whole world would absorb the inflation. Whole world would absorb that money because dollars demand in the world is a lot. But something changed in the year 2022. After Russia-Ukraine conflict, when Western nations froze Russia's $300+ billion in foreign reserves, countries around the world started realizing that if they can freeze Russia's dollar reserves, they can freeze ours too. So what happened? A buying frenzy of gold by central banks like we have never seen before. In the year 2022 alone, central banks around the world, they bought over 1,000 tons of gold. In 2023, they bought over 1,037 tons of gold. And in 2024, another 1,000+ tons of gold, making 3 consecutive years of historic buying by central banks of the world. They're buying gold. Now, this has never happened in the modern history. And you look at who is buying, Poland has been the largest buyer in the year 2025. Poland has actually added 83 tons year to date. China's central bank has been buying for 18 consecutive months now. They're now holding around 2,300 tons of gold. Turkey has added around 21 tons in 2025, bringing their reserves to around 640 tons. India, Kazakhstan, Czech Republic, Indonesia, Uzbekistan, all are aggressively buying. And even Brazil has bought gold for the first time since 2021, adding 16 tons in September 2025. And the investment firm Goldman Sachs, it expects central banks to buy 70 tons of gold every month in 2026. Now that's structured, strategic, and massive demand that creates a price floor. The question is why? Because gold is the ultimate natural asset. It is not American, it is not Chinese, it cannot be frozen, it cannot be sanctioned. It's universal money that has held value for 5,000 long years. Which is why this buying frenzy of gold and silver continues. Now, since we have understood this, let me take you deeper into something that will actually shock you. The Japanese yen has collapsed to 40-year lows in 2024. The British pound has been struggling. The euro's volatility has made investors nervous, and even the mighty dollar, despite being relatively strong, is losing its purchasing power domestically. So when you have such major currencies being unstable, where does institutional money go? The money of the institutions, where does pension fund go? Where does sovereign wealth funds go? And where does billionaires park their wealth? Your answer is correct. They park it in precious metals. And look at what has happened in Turkey. Their inflation went crazy. Their lira collapsed. And you know what Turkey citizens did? They bought gold. Gold ownership in Turkey is among the highest per capita in the world because they have learned through painful experience that paper money can become worthless. But gold remains gold. Now, some of you would remember March of 2023. When Silicon Valley Bank collapsed, Signature Bank collapsed, Credit Suisse, a 167-year-old banking giant, had to be emergency merged. But here's what they didn't tell you loudly enough, that the underlying problems never got fixed. Banks are today sitting on massive unrealized losses on their bond portfolios. The question is why? Because when interest rates rose sharply, the value of the older bonds, which were bought when the interest rates were low, their value crashed. So these banks are technically holding assets which are worth far less than their book value. Their book value is huge, but they are worth far lower now. And what about commercial real estate? It is also in crisis. With the remote offices, work from home, office buildings in major cities are half empty. And what about the loan against these properties? It is actually a ticking time bomb. When people lose their faith in banks, again the question is, where do they turn? They turn to physical assets, that is gold and silver. Again, now you realize why the prices of gold and silver is increasing. Now let me tell you something that's dramatically different about this surge, especially for the silver. Silver isn't just a monetary metal anymore. It's become absolutely critical for the modern technological world as well. And this is where many people won't tell you that technological world which we are building. Now, for example, solar panels. Now, each of the solar panel, they use about 20 grams of silver. And the world is installing solar capacity at an unprecedented speed, which is trying to hit climate goals and reduce energy dependence. So we are talking about hundreds of gigawatts of new solar installations globally, and which is why the want and the requirements of silver has hit a record high. What about electric vehicles? They use 25 to 50 grams of silver per vehicle, compared to just 15 to 28 grams in conventional cars. And EV production also is exploding in the world. So when we talk about 5G infrastructure, when we talk about smartphones, when we talk about medical equipments or electronics, all of these equipments, technological equipments, they require silver. And here's the critical part. The World Silver Survey has repeatedly warned that we are consuming more silver than what we are mining. And we are actually in a supply deficit for the fourth consecutive year, unlike gold, where most of what's ever been mined still exists in vault and jewelry. Silver gets consumed in industrial applications and it's gone. It's used up. It's destroyed in the manufacturing process. And which is why Bank of America's analysts have predicted that silver could potentially reach anywhere to $135 to $300 per ounce in the coming years, based on its industrial demands and also supply constraints. So there is supply deficit, as we know, there is monetary demand, as we know, plus there is industrial consumption as well, which would mean what? It would mean explosive price potential for silver. And this is what many people won't be realizing. Now let me address the elephant in the room. And the elephant in the room is inflation. Yes, we can say that official inflation rates have come down from their 2022 peaks when Russia-Ukraine war happened. In the US, CPI is around 3 to 4%. In Europe, it is similar levels. In India, we can say that it is around 2%, 1.5 to 2%. But my friends, do these numbers are actually matching with your living experience? Please tell me, has your grocery bill increased by just 2%? Have your rent just increased by 2%? No. Have your school fees, your healthcare cost, your electricity bill, have they only increased by 2%? The answer is no. The reality is that the real inflation, the inflation which common people experience, is much higher than the official numbers which they are suggesting. Governments change their calculation methods. They exclude volatile items like food and fuel, food and energy, the things which most of the people consume. And then they present a sanitized data. When real inflation is high and savings in the banks are earning only 6 to 7%, and the rate has also come down. While doing this, we are actually reducing the purchasing power. And while this purchasing power is going down, what will smart investors do? They will buy assets that have historically outpaced inflation. And those assets will be what? Those assets will be gold and silver. Again, one of the reasons why the prices are going so high. Now, till now, we have discussed about a lot of factors. But one more crucial factor is the dragon in the room, that is China. Now, China's economy is facing significant headwinds. Property sector crisis is there in China. Evergrande, Country Garden, multiple developers have defaulted in China. Local government is in a debt crisis. Youth unemployment is high. Demographic decline is beginning. But here's what's crucial. Chinese citizens have historically loved gold. And it's their culture, it's their tradition. And when their property market, which held around 70% of the household wealth, it started crashing, where did the money flow? The money flowed towards gold. Physical gold especially. And Chinese demands for gold jewelry, for gold bars, for gold coins have remained extraordinarily strong. The Shanghai Gold Exchange shows that massive physical delivery volumes have been there in the last many years. And you add to this the People's Bank of China buying for reserves also. And then you have enormous demand for the world's second largest economy. All of these things combined can be very significant to tell you that why prices of gold and silver have increased. Also, one more thing which you must look at is the geopolitics. See, always remember, geopolitical instability, it will always derive gold's prices. And my friends, look around the world in the January of 2026, what is happening? Middle East tensions remain complex. Israel-Gaza situation continues to have regional implications. Iran-US relations, they are very delicate. They are at its low. Russia-Ukraine, still unresolved after years of conflict. With the recent discussions about the potential peace, it is again creating an uncertainty. What about China? US-China strategic competition over China, it keeps global investors on edge. And here's something recent. President Trump's recent comment about Greenland and temporary tariff threats on European nations, it has created immediate market volatility. Market has been volatile. And even though he has later backed down, the uncertainty alone pushed the gold prices even higher. Markets hate uncertainty, please remember this. Every time there is a geopolitical shock, gold price will spike. And it's the ultimate safe haven. Gold is the ultimate safe haven. When missiles fly, when sanctions are threatened, when uncertainty reigns, gold shines. The market is essentially pricing in a chaos premium. We can call it as a chaos premium, chaotic premium. That is the recognition that we live in an increasingly unpredictable world. That is the reality. And here's what an uncomfortable truth is that connects everything, and that is the gap between the wealthy and the common people. That gap has also exploded in the last 1 decade when we talk about economic inequality, not just in India, but in the world as well. The top 1%, they are owning more wealth than the bottom 50% of humanity combined. And what do wealthy people do when they're worried about currency debasement? What do they do when they're worried about inflation? What do they do when they are worried about instability? They buy hard assets. They buy real estate, they buy art, they buy gold and silver. Billionaires like Ray Dalio has publicly advocated for gold allocation. Prominent investors, they have continuously warned about different currency risks. And family offices are increasing their precious metals holding to a very great extent. And always remember, when the smart money moves, prices moves as well. Now let me give you certain data that will open your eyes. Gold mine production is not keeping up with the demand. Many of the world's largest gold mines are aging. Finding new deposit is harder and more expensive. The easy gold has already been mined. And according to industry reports, for an all-sustaining cost for gold mining are now around $1,200 to $1,400 per ounce. Also, one more important factor is that the environmental regulations are tighter. Community opposition to mining is stronger, and energy costs for mining have increased. When we talk about silver, even more concerning is silver. Because it is a byproduct of a metal. About 70% of silver comes as a byproduct of mining other metals, like copper, like lead, like zinc. Production is tied to those metals' economics. Lower supply growth plus higher demand is equal to higher prices. That is basic economics. Everyone would know that. So if you're listening to this till now, it is very evident that now you know why the gold and silver prices are high. But here's the part that might make you a bit uncomfortable. But it's the absolute truth. The financial systems, like banks, like governments, mainstream institutions, they don't really want you to own any gold or silver. The reason is because every rupee you put in a physical precious metal is a rupee that's not in their system. That's not in their banks, where they can lend it out 10 times through fractional reserve banking. Not in government bonds, which funds deficit spending. They're not in stocks, which keeps the financial markets liquid. Gold and silver, they represent financial independence. They represent value that exists outside the system. They cannot be hacked, cannot be frozen, cannot be confiscated easily or devalued by printing. And this is why you will rarely see aggressive promotion of precious metals ownership by mainstream financial advisors. This is why the narrative is always that gold gives no returns. It's a barbarous relic. Just buy index funds. But here's the reality which nobody's talking about. Western gold ETFs, exchange traded funds, they're currently representing just 0.17% of the US. Private financial portfolio, according to Goldman Sachs, that's actually tiny. And there's enormous room for growth if even a small percentage of that money flows into gold. And think about it, over the long term, gold has actually preserved its purchasing power like nothing else. An ounce of gold in 1920 could buy you a good quality suit. An ounce of gold today can still buy you a very good quality suit, probably several. But can your paper currency say the same? Can your dollar say the same? Can the rupee say the same? In 1920, $1 could buy you a decent metal. Today, a dollar barely buys you a candy bar. That's currency debasement. Gold protected you and paper money actually faked you. Now, friends, let me share something truly explosive that very few understand. The paper gold and silver markets, that paper gold and silver markets I'm talking about, futures, ETFs, and derivatives, are massively larger than the physical markets. Estimates they are suggesting that for every ounce of physical gold, there might be 100 plus ounces of paper gold being traded. When you can create infinite paper contracts, you can influence prices downwards. But here's where it gets interesting. See, when the paper market faces a delivery squeeze, when more people stand for delivery than for metal available, that's when the prices can truly explode. Some analysts believe that we might be approaching such a moment in future also. For the Indian audience, let me make it very intentionally personal. India is the world's second largest consumer of gold. It's in our DNA. Wedding season, it is there. Festivals, it is there. Cultural events, it is there. Gold is integral to our civilization, that's all. But look at what's happening right now. The rupee has been gradually weakening against the dollar. We are fluctuating around 87, 88 rupees, 89 rupees per dollar. And every rupee depreciation, it makes imported gold more expensive. India's import dependency for gold is around 100%. We mine negligible amounts. So internationally, price rises and currency depreciation will be there. Okay, do understand this, that gold at 1,45,000 rupees plus per gram is making weddings financially devastating for the middle class families. A simple 50-gram gold set that would have cost 2.5 lakh rupees 2 years ago now cost over 7 lakh rupees. Think about that impact. But yet, demand still remains strong. The question is why? Because Indians intuitively understand gold's value. See, I've lived through currency devaluations. We have seen paper wealth evaporate. We have also experienced what our grandparents told us about partition, about the economic crisis. Gold saved families. Gold preserved wealth across generations. The Reserve Bank of India has been quietly adding to the gold reserves. And India's central bank gold holdings have been growing as a part of reserve diversification. It has joined the global trend of central bank accumulation, and this tells us something. Even at these high prices, institutional buyers are still informed. Individuals, they recognize the gold's long-term trajectory in upwards. So now the last question is what now? See, after all this analysis, the question is, what should you do? But what I can do is I can share perspectives. Historically, financial advisors suggested 5 to 10% of your portfolio in precious metals as insurance. Now, as we get a rich quick scheme, but as wealth preservation, physical versus paper. Physical has no counterparty risk. You hold it, you own it. But storage and security are also your responsibility. But when we talk about ETFs and sovereign gold bonds, they offer convenience and they offer no storage hassle. But you don't hold physical metals, of course. The timing is very important. Nobody can predict short-term price movements of gold and silver can be more volatile. And they can correct 10 to 20% in the bull markets. But if you believe, as I've laid out, that the structural factors like debt, currency, instability, geopolitics, supply issues, they're actually real and they are ongoing. So friends, let me conclude with a bigger picture. Gold and silver prices aren't rising in inflation. They are rising because they are telling us a story. A story about currency instability, about $38 trillion in US debt, growing by $93,000 per second, about a central banks buying over 1,000 tons of gold for 3 consecutive years, and about a geopolitical realignment. See, friends, the mainstream narrative will give you simple explanations. They'll say it's just inflation, it's just fair, but you deserve to know the complete picture. The economics, the geopolitics, the hidden dynamics. Goldman Sachs sees gold at $5,400 by end of this year. Some analysts believe silver could cross $135 or even higher. These aren't random predictions. They are based on structural factors, debt, currency weakness, central bank buying, industrial demand, supply constraints, and so many other factors. Whether you choose to own a precious metal or not is your choice, is your decision. But to make that a decision from a place of knowledge, not ignorance. The economics, the geopolitics, the hidden dynamics. Goldman Sachs sees gold at $5,400 by the end of this year. Some analysts believe that silver could cross $135 or even higher. These aren't just random predictions. They are based on structural factors. That is debt, currency weakness, central banking, buying, industrial demand, supply constraints. We are witnessing a historic realignment of the global financial system. The dollar-centric world over the last 80 years it has dominated is slowly evolving into something multipolar, more multipolar. Gold and silver are the beneficiaries of this transition. The world is changing, the financial system is evolving, and in terms of the great change, those who understand what's reality happening have the advantage. Straight for the future. I hope now you're able to understand that why the price of gold and silver have skyrocketed over the last 1 to 2 years. Do let me know what are your views in the comment section. I'll be very happy to read them. Till then, keep learning, keep enjoying. All the very best. Have a beautiful day. Thank you.